Hello, welcome to Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest today is Don Pollard. Don is a Chartered Life Underwriter, or CLU, and a Chartered Financial Consultant. And he's an insurance broker at Advanced Professionals, a regional insurance brokerage company headquartered in Northern California, serving about 350 clients. The company offers employee benefits and executive life and disability insurance planning. Don has worked in the insurance industry since 1973 and at Advanced Professionals for 12 years. He's managed insurance agents and trained agents, and Don is the incoming president of the Silicon Valley chapter of the National Association of Insurance and Financial Advisors. Now, because health care insurance is such a critical area, I've devoted 3 consecutive interviews with Don to discuss health care reform and choosing medical insurance coverage. And you can find the interviews about health care reform under past episodes at www.financialinsiderweekly.com. And today, Don and I will be discussing considerations in choosing a medical insurance policy. Now, I'm going to give a caution here, and that is that the rules for medical insurance may vary from state to state, and you want to be sure to work with a consultant who's familiar with your state laws. And this is kind of a complicated area, but I never shy from complicated areas for the show. So, Don, welcome to our show.
Thanks for having me back, Mike. I appreciate the opportunity.
Okay, thanks again for being with me. So, let's get started with our questions. First of all, some people view medical insurance something like the American Express commercials. Don't leave home without it. So what do you think about this?
Well, I think I agree with that statement. I'm not sure in the vein of American Express, but in any case, there are a couple of major reasons why I think it's really important to have medical insurance. And not the most important is that pretty soon you're going to have it under law. So,
okay.
But aside from that, number one is 65% of all bankruptcies are caused in part by unpaid medical expenses. So for the unfortunate people that end up having these expenses and they're unable to pay them, it contributes to a very stressful situation for those people in their financial situation. The other thing is having insurance allows you access to network pricing, what I'll describe as a contractual situation between your physician and the insurance company or the HMO. So if you don't have insurance, you are unprotected in that way. And to give you an example, typically in a PPO, participating provider organization, you're going to see a contractual discount of between 15 and 25% off of the retail price, which is what they charge people who are uninsured or just off the street. Under an HMO, it could be far less than that, depending upon how the HMO is structured. So certainly, the having of the insurance contract is going to be a valuable opportunity, so long, of course, as you can afford to have it.
Yeah. So, I mean, we had an experience not too long ago that we were filling a prescription, or having a prescription filled for my son. He has ulcerated colitis, and so he has a medicine that he has to take every month. And so my wife went to pick it up, and they said, this is going to be about $200. And after they picked her up off the floor, she said, well, what's going on? Because he has, medical insurance and so forth. And they said, oh, well, we don't see the information here on our file. So by the time that we finished, I think we paid somewhere between $10 and $20 for that prescription instead of $200. So it can make a really dramatic difference.
Absolutely.
Yeah. Okay, well, what are the typical places that people get medical insurance?
Well, generally, there's 3 rough places that you can get that. Number one is through your employer. And in our country, 2/3 of the adult people under age 65 that are insured have insurance through their employment. So that's certainly a big contributor there. And also, if your employer coverage, they typically would pay a portion of the premium on your behalf. So there's a subsidy that goes on too, as being an active employee of their company. Also, through employer coverage, you have the opportunity to continue group type coverage under the provisions of COBRA, which is a continuation law that allows you in California 36 months of additional coverage if you lose your job for any reason. If you aren't insured through your employer, you have the individual markets, which you can try to access. And again, healthcare reform has addressed this, not today, but in 2014, that's going to be resolved pretty favorably. But today, it's hard for people who have had medical problems in the past to get any kind of insurance that makes any sense through the individual market because of the underwriting situations. So you do have that, and we do have in California a high-risk pool, which you people have probably heard about the government thing. So we have one in California already, but it's really reduced insurance and the premiums are really high. So hopefully this federal program will adjust those premiums and make them more sensible. The other place that people would gather insurance is through Medicare, and that's of course the government-run system.
Right.
And through that system, most people consider a supplemental coverage to supplement the basic benefits of Medicare and provide higher benefits, and that is typically purchased through an insurance company or an HMO. And also you have, of course, Part D coverage, which covers your prescriptions, and that's something that needs to be purchased as well. There are Medicare Advantage programs, which is Medicare Part C, and those are currently available in either PPO or HMO format, depending upon your particular address. And these are the plans that are going to be affected by the reduction in the subsidy for Medicare through the new health care plan. So those plans, look for those to change, the Medicare Advantage plans. People will still have supplemental plans that they will be able to access.
Okay. So what are the principal types of medical insurance?
Well, typically you have three different sources or types of coverage. One is an HMO, Health Maintenance Organization, and this program has been around for quite a few years. And the basic idea here is that it's supposed to be designed around preventive maintenance, preventive care, and so there's very few minimal co-payments for services because they want people to go and access those services before they have big problems and need that. And these systems typically have a very low out-of-pocket when you go, when you experience the need for the care. But the premiums every month are typically very high because the HMO is getting involved early on in the process of taking care of you. So high premiums, low encounter fees, if you will.